So these subpoenas were probably filed on Friday. The Fed could have easily just gone, you know what, we'll park this, we'll keep this under wraps, we're not going to tell anybody about it. No, that's not what they did. Sunday night bombshell, Powell's out, he's delivered this video message, he's come out swinging, he's accusing the administration basically of trying to bully the Fed into lowering interest rates because that's what it's trying to do elsewhere as well. And he doesn't pull any punches. This is an angry Fed chair. You can see that he is determined to make sure that he is going to be up for the fight. And we've now got a battle that is going to probably rage between the White House and the Fed for some time to come. Yes, the fact that the Fed has come out, that Jay Powell has come out and delivered this message tells you that he is clearly worried that the Fed independence is at risk.
Do you see that as being a signal that he's more likely to stay on the Board of Governors after his chairmanship ends?
Who knows what he's going to do next, but you could certainly see it that way. So his term is going to come to an end. He can stay on the board until 2028, I think. That would make it that would obviously make it harder for the Trump administration to influence policy on the FOMC. So if Powell is worried about Fed independence, that will be certainly something that would allow him to maybe exert more influence going forward and deny the Fed influence going forward. But in some ways, you could argue that this ship is already sailing. We're about to see, we've seen the Fed governors being kind of renominated. This process is underway. So actually, an avenue for the White House administration to change the mix on the FOMC has already largely departed. But yeah, if you are Jay Powell and you're worried about Fed independence, that would certainly be one way, staying around to maintain that independence.
Yeah, I was reading John Author's piece, I'm sure you've read it this morning also, kind of arguing the case that it really is sort of pointless and self-defeating to try to push the Fed, and that this issue affects not just the Federal Reserve, the US economy and beyond, that it's a sort of really dangerous move, argues John Authors. And I thought it was very interesting that the two guests that we spoke to this morning, one from Carmignac, talking about how actually this means the US is much more like Turkey. And then another guest this morning arguing actually most of the move was last year. I wonder, in the process of understanding the threat to Fed independence, where are markets? Do they think that it's already arrived and they're over it, or do they think it's to come?
Some of it will have been priced in. This is not a new issue. This is an incremental part of an ongoing developing story. So the market will have priced some risk around this story. But I don't know what happens next, and nor do the markets. And as a result of which, the potential for a shock is there. You are going to see potentially long-end rates go a little bit higher. We're going to see CPI out this week. Can the Fed control inflation, which is a threat to a lot of Americans at the moment, if it's being forced by the Trump administration to lower interest rates? Its ability to do that disappears. You've also got to look at this kind of around the idea that the Trump administration clearly wants lower interest rates. Look at what is happening with credit cards. Look at what is happening with the cap that the Trump administration is trying to put in place. Look at what is happening with Barclays stock this morning. It is down. JP Morgan numbers are out tomorrow. It is the biggest credit card issuer in the United States. How is it going to respond? So, but you've got this kind of self-defeating story that could come through, that Trump tries to help the lower end of the US economy but ends up hitting the stock market at the top end, and that is the top end that drives a lot of the spending at the moment, which is keeping the economy moving. So there's so many unintended consequences here. So I don't think the market has fully priced it in, because we don't know yet how all the connections are ultimately going to be made. So we're definitely not there yet.